Welcome back, dear learners. Before the ad break, we did an interesting question where we prepared the GJ and we also were able to do the accounting equation. Let us now see, we have another question that we have. What does it demand us to do? It says, Jimmy, the owner of Jimmy Traders, has realized that after preparing the cash and credit journals, there's some transactions that have not yet been recorded. One of his friends has told him that such transactions need to be recorded in the GJ. This is definitely true. If you prepare your other journals and there are transactions that have not been recorded, such transactions must be recorded then in your GJ. Jimmy then asks you to prepare the GJ for the month of August, and the transactions are given. Let's see if we have somewhere to write. There it is. All right? Let us quickly do it together. Make sure that whatever I'm writing, you are also writing. You have your pen, pencil, paper ready. You need a calculator for this one too, so that you can punch in some figures. Let's start. Number 1, it says, a debtor, A. Adams, who owed 680, was declared insolvent. His estate paid a dividend of 50 cents in the end. This has been recorded, right of the balance, as irrecoverable. So what we want to know is how much is going to be irrecoverable. We will now say the amount that he was owing is 680, and we're going to write off the balance. So we have received 50, that means he still owes us 50. The amount therefore becomes 340. The day is the first. The details, we will now say, if we are writing off an account, we're going to have what is known as bad debts. Okay? Bad debts. And bad debts is an expense. There, my pen is just playing around. Let me erase that part. There it goes. Bad debts is an expense. So here it is bad debts. Yes. And bad debts is an expense. That means it increases on the debit side. I will come here, then I will now say bad debts. On the debit side, I'm going to have my bad debt, which is 340. Then I must have a credit entry. In this case, what is it going to be? It is going to be the name of my debtor, A. Adams. So I'm going to have A. Adams. And I'm going to credit now A. Adams with 340. Once I do that to A. Adams, I have to keep in mind that A. Adams is part of my debtors. And here I have debtors control. That means I must go now to my debtors control. And if I have credited A. Adams, I must come also and do the same in the debtors control. I'll come and say 340. Let's go on to the next one. The next one reads, the account of S. Smith of 500 is overdue for 3 months. Charge interest of 20% per annum. 500 is what is overdue on the account. The interest is 20% and it has been due for 3 months. How much is that going to give you? It will give you 25 rands. Once there is interest which has been charged, once there's interest which has been charged on the account of a debtor, it increases what the debtor owes. So I will debit S. Smith, who is my debtor, S. Smith, with how much? 25. Once I debit S. Smith, who is a debtor, I must do the same to the debtor's control. I come here in the debtor's control, debit 25. And the account to be credited, in this case then, is interest on overdue account. Interest on overdue account. And this is interest income of 25. And then that concludes this transaction. Let's quickly go to the next one, which is the third one. Write off the account of F. Owen as irrecoverable, 500. I'll come here and then I'll say If I'm writing off an account of FON, it means I'm recording bad debts. I'm going to have bad debt, okay? And remember, this is an expense. So I'm bringing it to my debit side. How much was he owing? 500. Then the account to credit is FON. The account to credit is FON, and I'm crediting it with 500. Once I credit a debtor with 500, I must come to the debtor's control and do the same on the credit side, 500. The last transaction reads, G. Gao, a debtor, is declared insolvent. His estate paid a first and final dividend of 20 cents in the rand by EFT, and they paid 292. Write off the balance as irrecoverable. Remember, whatever we are owing is 100, and they paid 20 cents. That means whatever that has not been paid is 80 cents. What we want to write off is 80, but what has been paid is 20, which is the 292. I want you to quickly punch that in your calculator. If you say 80, you divide 80 by 20, and then you say multiplied by 292. How much do you get? You should get 1,168. Now that you have that, remember, G. Gao is a debtor that has been declared insolvent. We're writing off bad debts. I'm coming here, bad debts. And I'm coming to the debit side, 1,168. Then the account to credit now is G. Gao, 1,168. That means whatever I do on the credit side of my general journal, I must then do it on the credit side of my debtor's control, which is in the general journal. I'll come here, 1,168. Whatever I've done to my debtor here, G. Gao, I do it again to my debtor's control. We are going to quickly go and do a next question, which is the accounting equation. The first transaction reads, a debtor, A. Adams, who owes 680, was declared insolvent. His estate paid a dividend of 50 cents. We have done that calculation, and we found 340. I'll say number one, the account to debit is bad debts. We know bad debt is an expense. It will affect owner's equity. So owner's equity is going to be minus 340. The account to credit is going to be debtor's control. The account to credit is debtor's control. And once you credit your debtor's control, you are coming to assets and you're saying minus 340. Okay. Number two. The account of S. Smith, 500, is overdue for 3 months. We have calculated the interest, and we came out with 25 rands. I will come here. The account of S. Smith has been charged interest. The account to debit is interest on overdue account. Here is interest on overdue account. And this is interest income. So I'll come to my owner's equity plus 25. The account to credit is S. Smith. S. Smith. And S. Smith is part of my debtors. That means my assets are increasing plus 25. Very important that you know, once you credit S. Smith, who's part of your debtors are increasing, so your assets go up. Plus, number three, write off the account of FON as irrecoverable, 500. It's a bad debt. I'll come here, it's bad debt, and I'll come now to my owner's equity, minus 500. And then, under my assets, I will have to first know which account to credit, which is FON, and then I will now come to my assets and say minus 500. What have I done wrong so far? You should have seen that when I did number 1, when I had no effect on the liabilities, I did not put a 0. Do not make that mistake when you do your practice. Whenever there is no effect, always put no effect. Don't leave it blank. Please put a 0. Number 4, G. Gao a debtor is declared insolvent. His estate paid a first and final dividend. We did that calculation and we got 1,168. The account to be debited becomes your bad debt. By now you know it affects owner's equity minus 1,168. And then it is G. Gao. G. Gao. Your assets, yes, definitely they go down because your debtors are decreasing, 1,168. Liabilities, no effect. We are going to go for an ad break, and I'm going to see you in a short while.